We're going to explore the interest that institutions have in blockchain, how blockchain is no longer a buzzword, but a reality. Please welcome to the stage Markus Infanger and Gareth Jenkinson.
Good afternoon, everyone. It's actually quite busy for close to 4 o'clock. How's everyone doing? Are we smiling? Are we happy? Are we enjoying ourselves? Give me a good hey. There we go. I just wanted to see if everyone's awake. For those of you that don't know me, my name's Gareth Jenkinson. I'm a journalist. I've been in the space since 2017. I was with Cointelegraph for a very long time, and I've joined The Block. I'm now head of multimedia there. So if you want to find some of our interviews and our multimedia content, please go check out their platforms or find me online. Today, it's a great pleasure to chat to Markus from Ripple, RippleX. And obviously, Ripple needs no introduction to the people in the room. This is a very different audience to what I remember 3 years ago, perhaps coming to Paris Blockchain Week, and in comparison to some of the other events that I went to a few years ago, it's a very institutional audience, and I think that's how we want to tee it up. First up is the evolution of this market, Markus. It's definitely very institutional now, which is probably well suited to what Ripple's been doing the last few years.
Yeah, that's absolutely true. I think, we as a company, we always took a stance that the digital asset transformation of financial markets is going to be a transformation in collaboration between, crypto native companies as well as legacy financial market institutions. Some of you may recall, many years ago, Ripple's partnered with banks like Stanchart or Santander around crypto payments early in the day. And so we feel very affirmed in terms of how the market has been shifting. And it's really become, more and more evident that this transformation is going to happen in collaboration with each other. And that's what we're all about.
We've definitely seen a big shakeout of hype, I think, especially in the last year. The meme coin cycle, I think, is well and truly dead, and most people in the industry are now very focused on RWA tokenization. The push for stablecoins and payments in the US in particular is massive, and really in my view as a journalist, the real focus here now is how do we use this infrastructure to transfer value around the world. Are you seeing that kind of sentiment now in the conversations that you have with potential clients?
Yeah, totally. I mean, to take a step back, I think there's a couple of key developments that have been converging that really changed the conversation and led to sort of this broader shift of realization, hey, this technology is here to stay, it's going to matter in terms of transforming financial markets. I think on the one hand, we really saw the crypto industry as a whole maturing. It's now multi-trillion-dollar asset class. There's been an institutionalization around crypto as an investment class. Obviously there's been spot ETFs in the US including XRP ETFs. It's been, crypto's been integrated in national stockpile. Separately, regulations have really shaped up nicely. Obviously, most importantly, with the US finally moving as well around Clarity Act, Genius Act, and it gives really institutions the comfort to lean in to technology. And I think a couple of other watershed moments were when, for example, BlackRock, the largest asset manager in the world, came out launching tokenized money market funds on public blockchain. The CEO basically stating, everything will be on chain. And that's led to a shift, I think, in two dimensions. One is within the crypto industry, where, I think a couple of years ago, the industry at large was selling basically, hey, here's alternative financial rails. They're more efficient, merge everything on there. Towards, hey, this is core plumbing for a new financial system, but it's going to be integrated rather than kind of a parallel track. And separately, I think, if I just recall conversations I've been involved in with larger financial institutions over the last couple of years, there wasn't a comfort a couple of years ago to deploy use cases, pilots on public sort of like blockchains with permission environments. And it was more like the DLT walled garden situation first and foremost. And I think that's really been shifting. And again, that's what we're doing at Ripple in terms of the XRP ledger. It's a public layer 1, but it has sort of like, built-in compliance, permission feature, deterministic settlements that really resonates with, with larger financial institutions.
You say that, but there's still a huge hesitance, I think, from some significant TradFi players where they're like, we're still skeptical. Like that sounds great, Markus, but I don't know if I can put $1 billion on your infrastructure and trust that something bad's not going to happen. How do you counter those arguments?
Yeah, well, we hear sometimes like, hey, the old system works well, and that's true, right? I mean, there's trillions of dollars that go through the financial system on a daily basis. And so it's not something that you can just, disrupt and replace overnight. I would, say in these conversations, what we emphasize is like, hey, look, yes, the system works, but it's also at the core somewhat stuck still in terms of the pre-internet era. If you think about it, I think the financial institution or financial industry at large has done a great job in investing and modernization on the peripheries, including trading systems. But if you look at the core operational plumbing, that's still, an average T+2 basis, assets take weeks to get issued, as in something like between $3 or $5 trillion is sort of like, locked up in capital just to manage things like, credit risk bufferings. Really no other use than just kind of like, bridging the inefficiencies of the system. And I could go on that, right? And so I think what we have here is really an opportunity to upgrade the core and bring it in the 21st century with, collapsing some of these inefficiencies. And we're seeing that happening now, more and more in the industry, and with us specifically working on some existing, production use cases, including with the likes of Viva Investors, DBS, Franklin Templeton, and see how we can integrate money market funds with tier 1 stablecoins like RLUSD, and then sort of like, enable instant collateral mobility and collapsing these credit risk bufferings and stuff like that.
Yeah, it gets very complex very quickly, but at least the infrastructure is there to build. I want to very quickly talk about just tokenization of real world assets, and we all know in the room that there's been a huge push for that, especially in the last 2 years, essentially. What really needs to happen for a lot more institutions to lean into this? And just to give some context, I mean, you saw Robinhood last year launch their own L2 to do tokenized stocks, and obviously that's a cryptocurrency exchange, but it's a very big financial app that people use in the United States. So people that are already leaning towards doing that kind of stuff are willing to take the risk and do it. But the efficiencies that you give are, I mean, they're just a no-brainer to me. If I can trade stocks 24/7 through the weekends, why aren't we doing that already? And what does it take to start twisting the arms of all these issuers to do it on XRP Ledger, Solana, Ethereum, all the different chains?
Yeah, it's a great question. So look, I think we're now at a point where we as an industry, as a crypto industry, can demonstrate what's possible with blockchain technology, and we're seeing that happen at Ripple with the XRP Ledger as an example, in terms of seeing real-world payments in the billions being facilitated for a fraction of the cost, and obviously at high speed. And so I think it's up to us to showcase what is possible, the value it creates, and we're now there. We as an industry as a whole, I think we do still see a lot of assets are being issued, but then they're not really mobilized and they don't really trigger useful economic activity and sort of like a self-sustained life cycle. And look, I think what needs to happen for this to really scale is two key things. One is regulations. They're starting to fall in place to make institutions comfortable. But as you know, securities regulations in the legacy financial world, they're hairy and they're also fragmented in different jurisdictions. So I think we don't only need clarity, we also need harmonization and so to some degree standardization across jurisdictions. And then we need seamless interoperability across networks, including between blockchain networks, but across legacy networks, if we don't want to recreate the same issues we're having with legacy finance, which is really the fragmentation of networks across broader jurisdictions. I think these are the two key unlocks. And yeah, but again, to my earlier point, I think the market is there, the regulations are there to really showcase now what's possible, and that's what we're doing.
I'm just going to gauge the room very quickly. Put your hand up if you understand the difference between XRP Ledger and Ripple. Okay. For the people in the room that don't, can you break that down for them?
Yeah, thank you for pushing for that clarification. So look, Ripple is really the company that built on top of the XRP Ledger alongside many other developers. It's a fintech company headquartered in Silicon Valley. We're 1,500 people, $50 billion valuation as of this quarter. And we've been around many, many years, one of the earlier crypto companies. We operate several different product lines, including the payments product, which is sort of the flagship product that Ripple's been known for many, many years. We have a bank-grade custody product called Ripple Custody. We operate a stablecoin business. More specifically, we issued a US dollar stablecoin at the end of 2024. We also basically have a prime brokerage business, which we acquired last year called Ripple Prime, and a treasury business, in addition to sort of like the RippleX work that I'm focused on, which is really the core contribution to the layer 1 blockchain, the XRP Ledger, which is essentially the distinction. So it's a layer 1 blockchain. It's been around since 2012. Was built for real world finance, with efficiencies in mind first and foremost, and also easily integration into sort of like legacy financial market infrastructures to a pretty monolithic design, API calls, and it's been battle tested, for almost 14 years now, 4 billion transactions in uninterrupted way through many bulls and bear markets. I hope that's clear now.
Yeah, I think you cleared it up pretty well. For someone who's been there for a long time, what's your kind of favorite use case of apps or services that have been built on XRPL?
Right now, we're pretty excited about this notion of on-chain repo markets. As some of you may know, so repo markets in the financial system are really sort of like, the daily plumbing of financial markets where, larger participants manage liquidity needs and opportunities on a daily basis. And it operates mostly on a T+1, T+2 basis. It's where what I mentioned earlier on in terms of like, trillions of capital buffers that are sort of like stuck in the system is pretty acute. And so we're working with several partnerships to build sort of like, almost like a minimum viable repo market on chain on the XRP Ledger, including with Aviva Investors in the UK, which was released publicly Q1 this year, but also in Asia with DBS, Franklin Templeton. So pretty excited about this opportunity specifically. The other obvious one is stablecoin and payments, which we're front and center facilitating more of Ripple's flagship products via stablecoins on the XRP Ledger. And working with payment service providers, remittance companies, car providers across the globe to scale that.
I was lucky enough to go to one of your Ripple conferences in Amsterdam a few years ago, and one of the most interesting things that kind of occurred to me while I was there was the silo of engineers and software developers that are proficient in building these different smart contract blockchains, and how they go about onboarding different institutions that might want to use different blockchains for different solutions. So when it comes to onboarding people onto XRPL, how hard is it to solve for that? Like if Franklin Templeton comes to you and says, we want to do XYZ on XRPL, how can we go about building that? How important is it to figure that out?
Thank you for the question. So I think the market has really shifted in favor to what this technology was designed in the first place in 2012. Again, it was built in a monolithic way. Whilst there's no full programmability, there's really a lot of smart functionality baked into the protocol, which leads to more predictability, again, more deterministic settlement, and baked in sort of like compliance features. And so we feel really, really good about, whenever we have these discussions, because It's very compatible in terms of integrating it into existing workflows rather than financial institutions having to build entirely new products or workflows. And this is really about integrating into existing workflows, just make it faster, cheaper, and optimize things around security. And so we feel really mostly vindicated in terms of design principles and how it's operating, and yeah, pretty upbeat about the prospects in that regard.
Just shifting attention to the US, obviously, we spoke about this before we did the panel, but I found it really interesting that Brian Armstrong was one of these really outspoken people that said that the Clarity Act, as it was presented in January, wasn't fit for purpose, and perhaps, the big banks in the US were just protecting their interest because they don't want you, the sovereign individual, to use stablecoins and just be able to earn interest on your money. Do you think that the legislation is striking a decent balance, and it is going to help the world move on to an on-chain future where we are predominantly using stablecoins as the money of the future?
Yeah, I think, so a couple of thoughts on this. I think number one, clarity is better than no clarity. And so I think that's important. Obviously, we've always been advocating for regulating less of the tech and more the use cases and usage around it. I think the second point that I personally feel strongly about is, there should be a level playing field for all, and innovation should obviously not be stifled out of the gate. But more generally, I think the direction we should all feel pretty pleased. What I'm sensing as well a little bit happening is we're seeing more competition in different jurisdictions around regulation, and the sensation of like, hey, if we're not providing clarity, we're going to fall behind, and also the realization that this technology is here to stay and it's going to play a dominant role in the financial infrastructure of the future, and the recognition that, hey, in order to stay competitive, we need to build sensible regulation. Otherwise, the liquidity and activity will go somewhere else. And so I think that's a good thing. Like in business, I think competition amongst regulators is probably positive. And I will also say, I was obviously very, very happy to see that we're seeing movements in the US, and it's going to, I think it's going to lead to a contagion effect, and also put on some pressure, hopefully in Europe here, to further provide clarity that's sensible.
I think what was also interesting to see was the variety of people that were helping advise politicians in the US on how to go about, the regulations that they're putting. Everyone from Brad Garlinghouse at Ripple, to Brian Armstrong. I mean, Sergey Nazarov from Chainlink. All the big names in the industry that have built really fantastic pieces of infrastructure were there advising, trying to strike the right balance between not breaking things as they are, but really trying to create an environment that does allow for the best parts of this infrastructure to be adopted.
Totally.
Yeah. I mean, I love that we're at that point where finally people are understanding what it is we have at our fingertips. One of the things I did want to dial into was on-chain credit and what blockchains allow us to do with credit that perhaps the existing financial system can't do, and how people are approaching that on XRPL.
Cool, thank you. So look, I think zooming out, credit plays an incredible important role in the financial system. It's sort of like, where really value is being created, where capital is put into production or to work, so to speak. And it's also, I think, significant pain points that are around there. I think there's something like, with SMEs, particularly small, medium-sized enterprises, they deliver something like more than 50% of global GDP, but there's trillions of dollars of lack of access to working capital due to inefficiencies, uneconomical circumstances, compliance burdens and whatnot. And I do firmly believe that on-chain credit can really ease that pain point significantly. In terms of how we're thinking about that on the XRPL, we just in Q1 of this year released a new amendment to bring a lending protocol natively on the XRP ledger, and that's really been designed again with similar principles like I laid out a bit earlier. So really institutional grade first focus. On the one hand, you can spin up liquidity pools, structured loan terms, but on the other hand, sort of like the risk framework and underwriting can happen off chain. So the parts that work pretty well in the legacy financial sort of like infrastructure, more mature, they can be adopted, kind of seamlessly integrated, and the stuff that blockchain does best is being delivered by the XRP ledger, 3 to 5 second transaction time, a fraction of a penny transaction cost, and so that's how we're thinking about it. It's going through sort of like community voting. I'm pretty excited to see that go live eventually.
Beautiful. I was going to ask you what AI tools you're playing around with currently, but we're actually out of time, so I'm not going to do that. I am Claude maxing. If anyone wants to know, like if you're not playing around with AI tools, just go pay the subscription, start playing around. You'll be amazed at what you can build by yourself at home. So yeah, get out there and do that. Markus, thank you so much for your time. Thank you, Mike. Thank you very much, everyone.
Thanks, everyone.
Welcome to Signal Week.